Mark, in terms of the casualties of this collision of tectonic plates, it feels like the dollar is actually one of the biggest casualties. And the famous Connolly phrase, our currency, your problem, feels like it's reversing a little bit. Your currency, your problem.
I think that's absolutely true. The dollar will be the long-term sustainable victim of the various interventions in policy by the US Treasury recently, combined with the new approach from the FOMC. And I think, this is in the backdrop that, we had a big dollar depreciation trend last year. It's kind of paused for about the last, I guess we had it the first half of last year. It's paused for about a year now. I think we're now into the next big leg of that long-term downtrend in the dollar. The dollar is still an expensive currency, and I no longer feels like it offers the attractiveness or the edge to justify that, particularly when you've got policy that's been implemented that seems on the fly. We expected Scott Bessent to be kind of the adult in the room when it came to policy, and I feel that impression has been very much undermined by some of the recent moves.
So the dollar's back under pressure. That's financial conditions easing. Is that just good for assets globally? It
is at its core. I mean, sorry, I shouldn't sound so tentative there. It definitely is at the headline level. It is an easier financial conditions. And of course, you have many other assets that are measured in terms of the dollar. So therefore, you see dollar weakness, you're going to see gold do well, you're going to see Bitcoin do well, you're going to see alternatives to the dollar. You're seeing the world's reserve currency weaken. That means people want to go back out into real assets and alternative assets. So it is good for other assets. Now, the reason I kind of paused a little bit initially was because obviously, if this happens because there's such an undermining of policy credibility that yields in the US start surging, well, that's going to be such a risk aversion event that you're probably ultimately going to see the dollar much, much weaker again. But it's going to go in waves of kind of bouts of strength as we kind of get deleveraging to back into people selling when they've been cleaned out. So it'll be an extremely hard trade to have. But I think yes, absolutely, the dollar downtrend longer term is sustainable.
Mark, how concerned are you that they really go hard on China when it comes to Iran with this plan set to be unveiled on Monday?
Not overly concerned in terms of that. Look, we've got to wait to see what's announced. We know that the general story of this administration over the last 18, 20 months has generally been a bark that's worse than its bite. And we have to see how much they're willing to kind of escalate to kind of traumatize markets again in the midterms. You've got to remember that the whole reason that we're going down this sanctions approach as opposed to the military approach is so that we don't disrupt markets anymore before the midterms. So it really kind of undermine that whole policy path if they then cause such disruption in markets by taking such a hard angle that upsets China greatly. So I don't think that's going to be a big risk event next week. It might be one in the short term, but I would suspect that by the end of the week, we've moved on to that. And of course, we'll then be focusing on Jackson Hole and wearing our cowboy hats.